Thank you for joining this webinar about your self-assessment calculation and payments. Before we start today's webinar, I'll just mention that this webinar is part of a series that will help you with your self-assessment tax return. These are the titles of the other webinars in the series. You can find out when these webinars are running and about other products to help you with your tax return on our HMRC email updates, videos and webinars for self-assessment page on gov.uk. In today's webinar, we'll look at what's included in your calculation, payments on account, the self-assessment tax calculation, payments and budgeting for your tax bill, and how to pay your tax bill. Before we look at what is included in your tax calculation, I'll just remind you about the Check Your Return page of the online tax return. When you've made all your entries on the tax return, the Check Your Return page gives you a list of the types of income you've said you did not have. It also lists all the sections you've completed on the tax return. Check you've entered everything that's relevant to your circumstances. If you've missed anything, you can go back to Tailor Your Return to add the section you need. Once everything has been included, select Next at the bottom of the page. This takes you to your calculation summary, which we'll see more of shortly. Let's start by looking at what might be included in your tax calculation. Your tax calculation is based on the figures you've shown in your self-assessment tax return. It will show your total income before tax, less your personal allowance, and how we've worked out any income tax due on that total income at the different rates. These rates may vary depending on where you lived in the UK for most of the 2024 to 2025 tax year. For example, England, Wales, Northern Ireland or Scotland. If you are self-employed or in a partnership, the calculation will also show any Class 4 national insurance if due and how this has been worked out. If you're making voluntary payments, it will also show you Class 2 national insurance due. Other amounts that may show in your calculation include student loan repayments and capital gains tax, though we won't see these in our example today. Once the total of your income tax and any other amounts due have been worked out, the calculation will show any tax which has already been paid at source, for example, through a job or pension. This is taken off the total due on your income to give the balance due to be paid for 2024 to 2025. We call this a balancing payment. This balancing payment is based purely on the figures you've entered on your tax return. It doesn't reflect any payments you've already made to your self-assessment account or any amounts on there that are outstanding. For example, if you've been paying a monthly amount into your self-assessment account. These payments will show on your self-assessment account and will be taken off the balancing payment once we process your online tax return and the balance becomes due. Let's look at an example. You set up a direct debit for £100 per month and the first payment is taken on the 15th of March 2025 and on the 15th of each month after this. You fill in and send your tax return for 2024 to 2025 on the 5th of August 2025, and your balancing payment from that tax return is £1,500. This shows on your self-assessment account a few days after we receive the tax return as due for payment by the 31st of January 2026. The £100 monthly payments you've been making each month from March 2025 will show as a credit on your statement until the balancing payment is becoming due, but will not show on your tax calculation. Around 45 days before the 31st of January 2026, the balancing payment will then show as becoming due. At this point, the £100 monthly payments you've been making each month will be allocated to the balancing payment and taken off the amount becoming due. Anything left to pay must be paid by the 31st of January 2026 to avoid any late payment penalties and interest charges. So, in our example, on the 15th of December, the amount left to be paid is £500. If a further direct debit is paid on the 15th of January, that will leave £400 to pay by the 31st of January 2026. As well as your balancing payment, your tax calculation may also show something called a payment on account. But what is a payment on account? It's a payment towards your tax bill for the current year, that's 2025 to 2026. Not everybody has to make payments on account. If you do, you make two payments on account. One by the 31st of January before the end of the current tax year, and another by the 31st of July after the current tax year has ended. So when do payments on account apply? Firstly, you have to owe £1,000 or more in income tax and Class 4 national insurance for the last tax year. We then look at the tax paid at source in the last tax year, for example, through PAYE. If it's less than 80% of the tax due for the previous year and you meet the first condition, payments on account are due. Each payment on account is half the tax and Class 4 national insurance due for the last year. Capital gains tax, Class 2 national insurance and student loan repayments are not included in the calculation. The two payments count towards your final bill when you submit this year's tax return. That's the 2025 to 2026 tax return. Let's look at an example. In your 2024 to 2025 tax calculation, after deducting the tax paid at source, there's £1,700 tax and Class 4 national insurance left to be paid by the 31st of January 2026. As we said earlier, this is known as a balancing payment. So are payments on account due for the 2025 to 2026 tax year? Well, there is more than £1,000 tax and Class 4 national insurance due for the last tax year. Was more than 80% of the tax paid at source? 80% of the £3,200 tax due would be £2,560. So in this case, 80% wasn't paid at source, as only £1,500 was paid in this way. So the payments on account for 2025 to 2026 are half of the £1,700 tax and Class 4 national insurance due for last year. That's £850 each. The payments due by the 31st of January 2026 are the balancing payment of £1,700 plus the first payment on account of £850. That's £2,550 in total. There's also the second payment on account of £850 due 31st of July 2026. The payments on account made for 2025 to 2026 will be shown on the statement of account as a credit. When the return for 2025 to 2026 is sent after the 6th of April, it can take up to 72 hours to show on the system and will show as due for payment 31st of January 2027. Around 45 days before the payment is becoming due, the payments on account are then taken off the amount owed from the 2025 to 2026 tax return. You can find out more about payments on account on gov.uk. Let's now look at the self-assessment tax calculation. As we mentioned before, this is the tax calculation summary. It shows the total amount due for 2024 to 2025, so the balancing payment. It also tells you the first payment on account for 2025 to 2026 and the total amount that will be added to your self-assessment account and become due to be paid by the 31st of January 2026. Please remember, the amounts shown are based on the figures you've entered in the tax return and do not include payments you've already made or any amounts that are outstanding on your self-assessment account. Further down the page on the calculation summary, if due, you'll see the second payment on account, which is to be paid by the 31st of July 2026. Save and continue takes you to your full tax calculation. This is the full tax calculation, known as an SA302. It gives a detailed breakdown of how your income tax has been worked out based on the figures you've entered. Please note at the top right, it shows your tax return is 95% complete. This means it hasn't yet been submitted, after which it would show as 100% complete. The first section shows all the income you've told us about in your tax return and the total income received. I'll just point out the Pay from All Employment section. The first figure shown is the total gross payment from all your employments. So this is the amount before tax was taken off by your employer. We then add to this any taxable benefits and expenses you received from your employer. In this example, it's a £675 medical benefit the employer paid in the year. Any allowable job expenses you're claiming tax relief for are then taken off. Claiming tax relief on job expenses is often misunderstood. Your tax bill is reduced by the amount of tax you would have paid on the amount you are claiming, not by the amount you claim. Let's look at an example. You're claiming a fixed rate deduction, sometimes called a flat rate expense, of £60 for laundering your work uniform. £60 multiplied by the highest rate you pay tax is the amount your tax bill is reduced. So if you pay tax at the basic rate of 20%, your tax bill is reduced by £12. The personal allowance is your tax-free amount for the year. This is taken off your total income received to arrive at the total income on which tax is due, or your taxable income. £12,570 is the standard personal allowance for 2024 to 2025. Your allowances may be higher if you're receiving marriage allowance or claiming blind person's allowance. If your income is over £100,000, it will be lower. You can find out more about the personal allowance and income tax rates on gov.uk. The next section of your tax calculation shows how we have worked out the income tax due on the taxable income. Here you'll see that the basic rate limit has been increased by £1,750, which is the amount paid into a pension, and also £157, the gross amount given to charity, which includes the tax relief the charity has claimed. So the basic rate tax band is increased by £1,907 from £37,700 to £39,607. This means that instead of paying tax at 40% on that £1,907, it is only paid at 20%. This gives the additional tax relief that's due on the payments into the pension and the gift aid payment if you're a higher rate taxpayer. We then show you how the income tax has been worked out at the different rates on your pay, pensions and profits. Note that the amount charged at the basic rate is the revised amount due to the pension contributions and gift aid payments. If you haven't claimed any tax reliefs, this would be the standard amount of £37,700. Next, we show the tax due on bank and building society interest. Note, as the £11 of bank interest is below the personal savings allowance at the higher rate, no income tax is due on this income. The next part of the calculation is where tax is worked out on dividend income. In this example, none of the dividend is taxable at the basic rate. The first £500 of the dividend received is not taxable in the year, and the remaining £1,675 has been taxed at the higher dividend rate of 33.75%. The income tax due after allowances and reliefs is then shown. If you have UK residential property income and had any residential property finance costs, these are used to work out a tax reduction from your overall tax bill at the basic rate of tax, currently 20%. This is where the relief is shown for the residential property finance costs. The tax relief for residential property finance costs cannot result in a refund of income tax, and so the full amount entered may not always be used. In this example, the full amount of residential finance costs entered, £12,475, could be used for the tax reduction. If they cannot all be used to give an income tax reduction, the calculation will show the amount entered in the UK property section, £12,750, and then the maximum allowable amount that has been used to work out the tax reduction at 20%, £11,500. The amount not used for the tax reduction, in our example £1,250, can be carried forward to be used in the next tax year. The relief for finance costs is taken off the income tax due after allowances and reliefs to give the income tax due. You can find out more about this in our webinar, the UK property section of your online tax return. Next, if you were self-employed or a partner in a partnership, you'll see how we've worked out any Class 4 that's due. The amount of Class 4 national insurance is your self-employment profit, in our example £23,725 minus the lower profits limit of £12,570. This leaves £11,155 on which Class 4 national insurance is charged at 6% in 2024 to 2025. If your profits are above the upper profit limit of £50,270, the rate for profits above this amount is 2%. Class 2 national insurance will only show if your profit was below the small profits threshold of £6,725 and you've chosen to make voluntary contributions. These are charged at £3.45 for each week that you were registered as self-employed or in a partnership. If your profit was above £6,725, Class 2 National Insurance is treated as having been paid and will show as zero in your calculation, providing you were correctly registered as self-employed for national insurance purposes. In our webinar, Finishing Your Online Tax Return, we looked at underpaid tax for an earlier year that was being collected through your PAYE tax code and why it needs to be included in your tax return. If this applied to you, the amount is added to the tax due for this year, and you'll see the amount here. Here we are showing you the total due for the year at this point in the calculation. So in our example, £10,946.87. Your calculation then shows the amounts of tax you've already paid during the year from employments, UK pensions and state benefits. Any amount of outstanding debt that was collected through PAYE in the year is then taken off the tax you paid. The outstanding debt is included in the PAYE tax you paid this year, but it's for an earlier tax year. So it needs to be taken off the amount you paid as it's not tax due for this year. This leaves the balance of PAYE tax you've already paid in the year. In our webinar, Finishing Your Online Tax Return, we saw a question about estimated amounts of underpaid tax in your 2024 to 2025 tax code that are due to be paid through your 2025 to 2026 tax code. This amount will become part of the tax due for 2025 to 2026. So that we don't collect the amount twice, we add this to the tax deducted this year as if it had been paid in the year. This leaves your total tax deducted, in our example, £3,068.67. This is taken off the total due for the year, so that's £10,946.87 minus £3,068.67, which leaves a balance of income tax and Class 4 National Insurance due of £7,878.20. If you are paying voluntary Class 2 National Insurance contributions, that amount would also be included here. At the bottom of the page, you're given an estimate of the amounts due by the 31st of January 2026. That's your balancing payment for 2024 to 2025 of £7,878.20 and the first payment on account towards 2025 to 2026 of £3,939.10. Please remember these amounts do not take into account any 2024 to 2025 payments on account you've already made, or any other payments you've made or outstanding amounts on your self-assessment account. Finally, you can print your full calculation by selecting this link. This opens up a page known as an SA302, which you can then print. You may need this, for example, if you're applying for a loan or a mortgage. Once you've printed your SA302, you can go back to the tax return calculation and select Save and Continue. If payments on account are due for 2025 to 2026, we then ask if you want to claim to reduce them. You may want to consider this if you know that the amount of tax that will be due for 2025 to 2026 will be lower. However, check the Help About guidance carefully. If you reduce payments on account, HMRC will charge interest if you paid less than you needed. Let's look at an example. Your tax calculation shows that you should make a payment on account of £1,500 in January 2026 and £1,500 in July 2026. Because you're doing more employed work and you're not going to be doing as much self-employed work in 2025 to 2026, you decide to reduce your payments on account. You estimate that you will owe £1,000 in 2025 to 2026 rather than the £3,000 that the payments on account are based on, so you reduce each payment on account to £500. When you complete your 2025 to 2026 tax return, you actually owe £2,000 and not the £1,000 you'd estimated. So your payments on account in January and July 2026 should have been £1,000 each. As the payments on account were reduced by too much, interest will be charged on the amounts not paid on time. So interest is charged on the outstanding £500 from the 31st of January 2026 and the outstanding £500 from the 31st of July 2026 until the amounts are paid. Rather than having to pay interest, you may be better overestimating your payments on account. If you pay too much, you would then get a refund when your tax return is processed. It's also a good idea to send your tax return before the July payment on account deadline. That way you know exactly what should be paid in July, which would mean you'd only pay interest on anything that was not paid in January, reducing the interest charges. On the tax return, if you choose Yes to reduce payments on account, you're asked to enter the reduced amount for your first payment on account and explain why you are making a claim to reduce it. Your second payment on account will be set at the same amount. After viewing your self-assessment calculation, you can then save a copy of your return before you submit it. You can find out more about how to do this in our webinar, Finishing Your Online Tax Return. We'll move on to payments and budgeting for your self-assessment bill. Once you send your online tax return, it can take up to 72 hours for your records and statement to show your final tax bill and the amounts to pay. Your balancing payment and first payment on account, if due, must be paid by the 31st of January 2026 to avoid interest charges and any late payment penalties. We recommend that you pay your self-assessment tax bill online. If you send your self-assessment tax return early, you'll know sooner what needs to be paid by the deadline. This can help you budget for your bill. To help you avoid missing the deadline, you can choose to make your payments earlier. If you prefer to pay towards your next tax bill regularly throughout the year, use a budget payment plan, or you can make regular one-off payments through your online bank account by using faster payments, setting up single direct debits, or by sending a cheque. This page on gov.uk has guidance on setting up a budget payment plan to make regular direct debit payments. To use a budget payment plan, you must be up to date with your previous payments. You can choose how much you want to pay and how often. You can pause your payments for up to 6 months if you need to. The amounts paid will be used against your next tax bill. If it doesn't cover the full bill, you'll need to pay the difference by the deadline. If you've made any payments towards this year's tax bill, such as payments on account or regular monthly payments, please remember these were not shown in your self-assessment tax calculation and need to be taken from that amount due to work out the amounts to be paid by the deadline. To check the payments made, sign in to your online account and select the option to view your latest self-assessment return. Then select View Statements. The amounts paid will show as a credit on your self-assessment account. If your return has been processed and the amount is becoming due, the payments made will show as being taken off the amount due from your tax calculation. You can also find the amount due to be paid in the HMRC app. Once you've signed in, select Self-Assessment to go to your summary and choose View Breakdown to find out what you've paid and the amount you owe. Let's look at some of the ways you can pay your self-assessment bill. The time you need to allow for your payment to reach HMRC depends on how you pay. Remember, your payment must reach HMRC by the deadline to avoid late payment penalties and interest charges. You can find out how long it takes for each payment method to reach HMRC on the Pay Your Self-Assessment Tax Bill page on gov.uk. If the deadline falls on a weekend or bank holiday, you'll need to make sure your payment reaches us by the last working day before. That is, unless you're paying by faster payments or by debit or corporate credit card. You can set up separate direct debit payments so HMRC can collect single payments on the 31st of January and the 31st of July. To pay by direct debit, you need to use your HMRC online account. You can approve a payment direct from your bank account. You can use online or telephone banking to pay by faster payments, CHAPS or BACS. You can find confirmation of the bank details to use on the Pay Your Self-Assessment Tax Bill page on gov.uk. You can pay online by direct debit or corporate credit card. You can't pay by personal credit card. There's a fee if you pay by corporate credit card or corporate debit card. The fee is not refundable. There is no fee if you pay by personal debit card. To pay, go to gov.uk, search Pay Your Self-Assessment Tax Bill. On the Overview page, select this green button and follow the on-screen instructions. Alternatively, you can also use the HMRC app. There are other ways to pay your tax bill, such as by cheque and bank giro, and you can find out about these and all the different ways to pay your tax bill on gov.uk. If you have missed the deadline or know you cannot pay your tax bill on time, this page on gov.uk has lots of advice and guidance. If you owe up to £30,000, you may be able to set up a payment plan to pay in instalments. This is called a time to pay arrangement. You may be able to do this online. If you successfully set up a payment plan online, you don't need to contact HMRC. If you cannot use the online service or you've missed the payment date, contact the Self-Assessment Payment Helpline as soon as possible, as you may be allowed time to pay. Don't delay contacting us until your payment is due. You have to pay interest on late payments, but you may avoid late payment penalties by setting up a payment plan online or contacting HMRC. Remember, if you're facing financial difficulties, we may be able to help you. It's best to act early. I just remind you that these are the titles of our other webinars in the series to help you fill in your online tax return. You can find out when these webinars are running and about other products to help you with your tax return on our HMRC email updates, videos and webinars for self-assessment page on gov.uk. We're nearly at the end of the webinar now. Here's a summary of what we've covered today. In today's webinar, we've looked at what's included in your calculation, payments on account, the self-assessment tax calculation, payments and budgeting for your tax bill, and how to pay your tax bill. Our full range of help and guidance can be viewed online from your mobile, tablet or PC at any time. Thank you and goodbye.